Welcome to the Infra Insider podcast from Infra-Be, a leader in renewable energy and infrastructure executive search. Join us as we dive into insightful conversations with industry leaders, pioneers and visionaries shaping the future of infrastructure and renewable energy. Discover the latest trends and innovations and challenges driving the transition towards a greener and more resilient future. Please remember to like and subscribe. In this episode of the Infra Insider, we sit down with the managing partner of Zouk Capital, a private equity firm behind some of the UK's most ambitious electric vehicle charging infrastructure projects. From closing a government-backed fund in 2019 to now backing 7 EV businesses, including Believe, which recently secured £300 million rollout to secure 30,000 new public chargers, and Chargy, which raised 100 million to expand on-street parking. Zouk is shaping the way we power the EV transition. We explore how they've achieved standout success, what they look for in an EV investment, and the challenges of building national infrastructure, and what comes next in one of the fastest moving sectors in the energy transition. Massimo, welcome.
Well,
lovely to see you.
What an introduction. I hope
you like that.
Yeah, I have to say. I'm going to show it to my kids, so let's see if they...
I've actually been rehearsing that for days. So, you know, if there was anything wrong with it, please let me know. It was difficult to create such an introduction because you have invested in so many exciting businesses. And just before the call, actually, before I'd written up my write-up, we also talked about Zest as well, which is also a really exciting business within your portfolio. But we're going to talk about them in a bit more detail. Massimo, before we actually move forward, can you tell me a bit about Zouk Capital and what they do?
All right, Zouk is a private equity that invests in the energy transition across 2 strategies. We have a climate tech strategy, mainly focusing on software with a dedicated team. And then we have the sustainable infrastructure strategy, that is the one that I'm heading, that focus on, sustainable infrastructure that mostly includes EV charging, renewables, and energy efficiency. We like to back companies, so we build companies. We back companies that roll out the infrastructure, and we grow them until they mature to, as I say, to go to university, to be owned by the next owner.
And you know what? You've been doing this for well over, 15 years?
Yeah.
And it's interesting to see, so many other players out there are starting to kind of take up this kind of strategy. So Zouk clearly well ahead of their time. And by being well ahead of their time, you're, one of the first movers into the EV market. So obviously we're going to focus on EV today. What drew Zouk so heavily into the EV charging infrastructure market? And how's that conviction evolved over time?
All right. So this is actually a good example of what we do. So we usually, as I said, we invest in the energy transition. What we try to do is to spot those niches that have been overlooked or that would be promising along the way, right? And we try to be ahead of the curve. We invest them before everyone else sees them. And I think we started to invest in EV charging back in 2016. At the time, we kind of saw all the stars getting aligned for these sectors. First of all, if you need to decarbonize the economy, you need to decarbonize the transport sector that, roughly speaking, is 20 to 30% of the emissions. And if you need to decarbonize the infrastructure sector, the EVs are almost the only game in town. Yes, people talk about hydrogens. I think there are 5,000 hydrogen cars today in Europe. And while EVs are a mature technology. Back in 2016, we also saw that were introduced very favorable regulatory regimes across Europe and the UK. and also that the OEMs were starting to invest heavily in the sectors, in the billions, to transition and set up their EV platforms. Tesla was the first one, but we saw all the major OEMs already investing and starting to invest in the sectors. And really, EV charging was the bottleneck. We saw that it was attractive because it has very high barriers to entry. So it's very much a national network. But once you do, you have a very valuable assets because it's very difficult to replicate, right? So these were all and clearly now we did the math and we thought it was a profitable opportunity. So that was really what drove us into the sector. It's probably one of the largest infrastructure opportunities ahead of us because there are estimates that set at 300 billion the amount of capital required to transition to EVs in Europe. So not many opportunities are as large as this one.
Yeah, no, it's incredible, and it's obviously gathered momentum since, I think it was 2019 or 2020 that you secured the government backing.
Yeah, well, that was, I think, 2019. At the time, the government was running a tender to select a fund manager to raise a private equity fund dedicated to public EV charging infrastructure. I think that was one of those situations where we were in the right place at the right time. So we participated in the tender.
I don't know about that. I think it was, I remember at the time, because I was recruiting for you. I think it was incredibly competitive.
It was. But I think we were one of the few fund managers that had actual experience in EV charging, because at the time, I think we already did 2 or 3 investments in that space.
Yeah.
I suppose that was one of the reasons why we won it. And we were able to raise capital from other institutional investors, the likes of Mubadala, Church Commission, and a few others, Willis Tower Watson, and so on. And therefore, we were successful in raising the fund, and we started to invest. And we also did already an exit that was Instavolt, quite successfully sold to EQT.
So I noticed that you exited that in 2022.
Yeah, we also exited another investments that we did in Italy, a company called B Power, that we moved to ENI, that is the national oil companies it's not really national, but it's partially national in Italy as an oil company, but is now part of the name escapes me, Plenitude. So it's the charging arm of Plenitude.
Do you know what? While we're just on the whole portfolio here, so in the part of portfolio, because all of the businesses are quite different and they're quite unique. They all offer something different, which is what I love about it. So you've got Chargy, which is street side charging. So they're using lampposts and billboards. Then you've got Instavolt, which is was the rapid charging one that you sold in 2022. EO Charging, which is actually focused on fleet. And I'm assuming, when you are, looking at these companies, you want to select carefully that they're not competing with each other. You've got Zest, the new public charging network, which we'll talk a bit more about. We've got Believe, Energy Park, and Liberty Charge, which I believe is actually a JV between Liberty Global and Virgin Media. So
Liberty Charge changed its name and is Believe, so they are the same company, but it is a partnership in between us and Liberty Global.
Fantastic. So just looking at the portfolio, and there's obviously more depth that we can go into. What are the common characteristics that you're looking for across your EV portfolio?
So what are the common? The first one, good people. So we always start from the people. So we build companies, and people is the key ingredient. So what we're looking for is that is actually good for you, Daniel, right? So
my ears pricked up.
Exactly. Part of our business. So we look for very entrepreneurial people, highly professional, that ambitious and with skills. So that is point number one. No people, no company, no business. Then we look for very sound business plans. So ambitious business plan, but very realistic expectations. we know what we're doing. So we've been in the space for a long time, and we want to underwrite realistic business plans with sound strategies. Sorry, let me switch off this one. Then again, what we do when we build these companies is that we take no shortcuts. Essentially, we build them from the ground up to be leaders in their space and large companies from the outset. I always say that they are not startups. They are large companies at the beginning of their journey. That is the way we look at them. And then robust financing arrangements. So they need to have the fuel, the stamina to be in the market for the long run, right? So we're not to flip them after 1 or 2 years. And finally, we try to in-house. We really want them to be competent in what they're doing. So we try to in-house as soon as possible all the mission critical functions. So that is really the way, our recipe for building these companies.
So in short, the secret to building a good EV charging business is simply hire a good recruiter. I'll put my number at the bottom of the screen shortly. So that's interesting. Obviously, you need to work very, very closely with these management teams. So there has to be that sort of general chemistry. But I imagine the management teams of all these businesses are, incredibly driven, very dynamic people. And I can say that confidently because I've worked across, a number of your portfolio companies, and that really resonates across the EV market. It's a really, really nice sector, to be involved in. Within the last sort of, I think, 2 months, there's been a fair amount of publicity around 3 companies within your portfolio. Securing debt and equity, but I think the numbers are quite important to me. The reason why it's so important because we're currently in a climate where it is quite difficult to raise finance. But we've heard of Believe securing 300 million, Chargy securing 100 million. I believe Zest have also been in the same position of securing major funding. What made those businesses stand out? And how have you supported their journey to where they are today?
Well, I suppose that, this is actually a question for maybe the banks behind the financing, but I like to think that they appreciated the robustness of the business plan. They appreciated the people running this business, very competent, very sophisticated infrastructure companies, as I said, because to win tenders, to install this infrastructure, to run this business, you require very sophisticated, companies, and 100 people company, just to give you a sense. Okay. And I like to think also that their shareholders were instrumental, so probably didn't do too badly, in supporting this business. And finally, EV chargers are becoming more compelling as an infrastructure opportunity. So, the banks are usually the last one to buy, correctly so, to buy into, but they're now seeing how compelling it is, and they're prepared to lend money to what they perceive are the best in class in this space.
So still an incredible amount of growth to come.
And also because the opportunity is there. You can see now, especially in the UK, that tenders are coming out in the thousands from local authorities.
Absolutely.
It is really happening. So, and there are not many companies that are well positioned to take advantage, to participate in those tenders with credible credentials and to deliver those on those opportunities.
There seems to be a lot of digital innovation across the EV ecosystem at the moment. You're seeing new technology all the time. How do you balance the digital innovation with the physical infrastructure investment?
Well, I'm not sure anymore there is a balance. The two are so intertwined, they are one and the same, really. I mean, there is as much infrastructure in the cloud, always says, that as there is in the ground, right? It's not only about installing sockets is about really running a network of automatic shops distributed across the country that will interact with people, usually with very short patience, right? So you need to be able to really meet their requirements, their demand, and the software is key because it really drives the customer's experience. So usually we usually start from the customer, and the first layer of the company that interacts with the customer, apart from the people, is software. And you got 3 or 4 layers of software before you get to the physical infrastructure in the ground. So you can call it balance. I would say they are one and the same, right? So, but I suppose it's the same for almost all infrastructure investing these days. So
probably more so led from the customer on the EV side.
To have is the only way to invest. And in the future, I think it would be a differentiator. If you're not up, if you don't up your game on the softer side, you're just not able to compete.
Okay, interesting. It's easy to look at someone's success and you know and just see that they've landed there, but I'm sure it wasn't plain sailing. What have been some of the biggest learning curves for you and Zouk in this space?
Well, it wasn't plain sailing. It's always that's why we need people in the business, because you start with some assumptions and an idea. Maybe you need to change your plans along the way, and that is where people make a difference, right? Because intelligent people react to the environment, learn, and adjust. But what are the key learning curves? First of all, the EV cars are not like traditional cars. You need to change your mindset. Usually, if you drive one, you will get it, right? But generally speaking, it takes a certain lead time to charge a car, different from a traditional car. And therefore, the places that are suitable to refuel a car are not necessarily suitable to recharge a car. No, not many people would like to spend 40 minutes in a gas station, so they need very rapid charging there. But at the same time, not many people would like to go back and unhook their car midway through a football match if they drove to the stadium to see a car. So you really need to understand that there is a lead time. You need to disrupt as little as possible people's routine, and you can do that taking into consideration that electricity is ubiquitous, right? So there is a way to provide this service without having convenience as your north pole, right? In providing the service. Secondly, what we learn is that software is important. Not when we started, we didn't think so. The software is key in everything we do, from interacting with the customer to running the infrastructure, solving problems on the infrastructure, as well as in locating the most suitable places for this infrastructure, because you need to look at traffic, you need to look at who's living in a certain area, you need to look at the amenities around your infrastructure, competition, so on and so forth. So it's not something that you can do on the fly. And again, you need to take all this data that you accumulate over time, draw conclusion, and let me say learn, train your models to get better and better. Artificial intelligence is be everywhere these days in any conversation, also with kids. But there is an element of that you accumulate a lot of data and you gotta learn from there, right? So that is very, very different. And finally, that you need very sophisticated companies to do that. As I said, it's not something that you improvise. You need people dedicated to participate in public tenders, people dedicated to dealing with private customers. They need to know about real estate, about connections, about the businesses that will host the infrastructure, and finally, how to deal with drivers, right? So it's not something that easy.
It's probably more. Would you say it's more complex than previous investments that you've made outside of the EV space?
I've been in the EV space. They are all evolving in the same directions. My background is in renewables, in energy. Clearly, they are 1 or 2 degrees more complex than renewables, right? Because renewables you build the infrastructure, you need to run it effectively, but you don't have this B2C, B2B continuous interaction.
Yeah.
Right? So one of the first things that we did, when I did when we started investing, then I had to deal with marketing. I never thought about marketing before. Now it's very important, right? So you need to. Well, it makes a lot of sense, right? So we needed to move on and up our game, really. I suppose people investing in normal companies always did it. People like me were big dinosaurs and had to.
It must have been quite an exciting period then, the last 5 years. It's probably completely it's probably, you know, accelerated your thinking and probably brought a lot more excitement into your day to day.
Look, you know, the thing that for me is most rewarding is dealing with people as opposed to assets.
Yeah.
Yeah, actually, I let them deal with the assets. I take the people side and the relationship with people. That is always very rewarding.
Yeah.
Very rewarding.
Well, that's the fun bit, isn't it? Dealing with people, not just assets,
I
or
know
at least the people behind the assets.
absolutely. We're coming to your field. I know. So again,
we're bringing you back. We're bringing you back. But I'm going to come straight back into your field now. So look, investing in EV infrastructure businesses, it's known that it can be that the returns can be much slower to realize. So how do you approach the long-term value creation when returns can be slower? What's the approach there?
I understand. Let me caveat though that we did a couple of exits, so I might
That's
not be
fine. You're allowed to exit a couple of them.
exactly best position to talk about long-term returns. But generally speaking, what I would say is that you need to understand what you're investing in, right? So you're building the infrastructure for the cars that will be on the roads over the next 10 to 20 years. Okay, so what you're building now is the network. The asset is the network. It's not a single charge point. So you need to have this long-term mentality. If you don't like that, you're probably in the wrong place, right? Now,
Okay.
that it's no different in a way from if you build a power plant, you need to know that until it is completed, you know, it won't produce electricity. Here is a bit different because you got cash flows in between, but the larger the network, you know, the better it is, and that will be capital intensive. But you need to know what you're doing, right? And let me, as I always say, the challenge that you see today is exactly that barrier to entry that will make it attractive in the future, right? That is why the large companies and the most successful companies will attract a premium. That's exactly the reason, right? If it was easy, it would be worthless. Let me put it this way, right?
There's quite a high barrier to entry then.
Like you know, building the company itself in it takes 3 to 4 years, and you got to find the right people. And it's not. I mean, again, it feels like a spot for you, right? But you know, finding the right people is not that easy, right?
No,
And
not well, especially in a sector like this. You know,
exactly.
it's not mature enough. So we have to be clever in finding people on the periphery that complement it. But it's interesting what you said. You know, it's about marketing, it's about customer focus, it's about technology. You know, we can draw all those things from other sectors into this. But you know, at least we're a bit further on now. You know, with the market has evolved, so at least there is some really good experience out there. But at the same time, the stuff that probably makes this market so exciting is the fact that, you know, people are coming in from it from all different kind of sectors and focuses.
Absolutely.
It's definitely not renewables. It's not wind and it's not solar. It's far from it. It's a far unique skill set, which is out there if you use the right recruiter. Um, By the way, it is a Friday afternoon. I didn't mention that to the listeners, so that there is that Friday feeling in the air. But let's get a bit more serious, because there is something that, you know, this market is can be hugely led by the public sector. Like a lot of sectors, but maybe this one even more so, especially in the UK. How are you collaborating with the public sector stakeholders to scale the rollout?
Well, you know, first of all, our companies have direct relationship with all the local authorities that run these tenders. Clearly, there is a period in which they try to cooperate with them and answer their questions. So we always tell them to be as cooperative as possible, because it is in all interest that these tenders are very well structured. Because what you want is a fair deal for both of you, right? Because also for them, if they award these tenders to people that are not going to be there in the long run because these contracts are not profitable, are not well structured, and so on and so forth, that is an issue for the entire market, right? So I always encourage them to be fair and potentially also to invite competition in these tenders, because this is the way Western societies have solved most problems, right? So to strike the right balance between customers and service providers. So they participate in tenders, interact with local authorities, and also with association in the sectors, right? That's what we do, really. If required, we pitch in as an investor with our investor hat. That's the way.
But then again, public sector sentiment is also what's helping the growth across the market.
Yeah, I think there was a major shift, I would say, in the last year or so. Maybe also probably fostered by the Levi funding, but generally speaking, by also the availability in the markets of more affordable cars. So it is becoming more of a mass market thing. It is, and therefore there is pressure to have EV charging infrastructure available for everybody, not only for the well-off that have also parking in a nice villa. And therefore, EV charging is becoming more of a necessity as opposed to a nice to have, right? And
definitely,
with the opportunity of Levi's, local authorities are getting on the case. It's an effort for them because they not necessarily prepare for this new business, but they're learning. I think we're getting there. And you can see that dropping, coming in the form of the tenders that we recently seen in the market, right?
Yeah, no, you make an interesting point about the actual cars are becoming a lot cheaper to purchase, and there's so many tax incentives, isn't there, as well, for company car drivers. What trends are you watching closely in the EV charging space? Is there anything upcoming that we should keep an eye out for?
These are all secrets, but one of the obvious trends is consolidation. So I think it is becoming obvious that there are some companies that are better equipped than others to participate in this very capital intensive, long run type of business. So there are some players that maybe didn't have the conviction of the funding or other reasons to continue to operate these networks, and therefore decided to exit, and there will be consolidation, right?
We've seen that a lot over the last sort of 24 months. Less so recently. But yeah, I suppose that's sort of naturally how a market evolves.
I think so. Also because to participate in these very large tenders, you need large companies. So that is trend number one. Trend number two, that I think is probably well epitomized by Believe, is that debt is coming into the market. So that is one of the largest transactions that we've seen. There were others, and I think they will see some more in the coming months. And this is again a testament of the market being more mature, to the point that debt investors are willing to enter it, right, and back these companies. So these are the two key trends. And like I said, the third trend is that EV charging is shifting from a nice to have to must have, right, to support the energy transition. I think the local authorities, or in any case the government in all its incarnations, is getting there, and therefore it is happening, right, in some countries sooner than others. I think the UK is really at the forefront in that sense.
Yeah, that's good to hear. No, it's really happening, and that's why the money's flowing into it. But it's an interesting, the second point that you said, that something that's changed is the banks are getting behind it, which is really good to see, because I think there was probably too many unknowns a few years ago, but now there's a clear future, which leads me nicely onto my final question. Just as we could talk on for longer, I'm sure, but the final thing, and people hate this question, but I think you'll answer it beautifully. What does success look like for Zouk's EV strategy in the next 5 to 10 years?
What is success?
You know what? That's a whole new episode.
That's a new episode, right? Obviously, we are a private equity, so I can give you the boilerplate success. And when we exit these companies, we want to, achieve a good returns for our investors. But the reality is that, as I said, we are building companies. So I really take a lot of pride sometimes to think we started from a bunch of slides and we created companies of 100, 150 people. And well, today I was just looking at LinkedIn. There was a picture of the Zest team in its glory. And it's really good to think that you are participating in the energy transition, you're building the infrastructure for the future, to doing something good, and at the same time you're creating jobs. You have all these people actually around you, and you were instrumental in doing that, right? So that is success to me. And sometimes even after you sell these companies, as it was the case for Instable and B Power, seeing that they continue to be successful under another stewardship, I suppose it's a little bit like when hopefully I got a daughter, right? But I like to think when she gets married and she leaves, I like to think that she's going to be happy also without me.
That's that, Massimo.
Staffer in Italian, that, but I suppose.
What a great analogy. And you know what, Zouk is such a lovely business. You're a private equity business, but you're a bunch of personable, caring, friendly people in your approach. That's why the government awarded you this money originally, and that's why I think that the business has been so successful. And we've talked about people here as well, but your turnover rate, of staff within the business is also incredible. So anyone who ever had the chance to work with you guys, or even come and work for you, will find themselves a very, very good home. And I think for me, Zouk's approach to this market, and all to your other markets as well, is always incredibly refreshing. And I'd like to thank you very, very much for coming on the Infra Insider today. What you've discussed is really, really insightful. I think anyone listening into this is probably also thinking about maybe investing across the EV charging space. That there's lots and lots of grounds to do so. There's lots and lots of growth to come. And we really appreciate your time today.
Well, thank you, Daniel. Thank you.
Thank you, Mas,
for having me.
It's a pleasure. Thank you very much, and have a lovely Friday.
Thank you.